thanks for coming today. Great to be here, and as I was 3 years ago, and great to see the Master Investor Conference back in full face-to-face swing. I'll keep moving. We have limited time, so Dart Mining, based in northeast Victoria in Australia. Forward-looking statements, I'm sure most of you are familiar with those. A very quick corporate metrics, very small market cap. Unfortunately, the market's been pretty negative towards junior mining or junior mineral explorers. We're about a 12 million Australian dollar market cap. That's about 7 million sterling, I guess. Dart's footprint in northeast Victoria, the area that we hold our tenements within is a mountainous or orogenic region of the country, highly mineralised, probably one of the most mineralised parts of the entire country, and very hilly and snowy in winter and all that sort of thing. Dart holds around 6,000 square kilometres of ground in northeast Victoria. It is a region of polymetallic prospectivity, meaning many metals, and I'll go through some of those. But in summary, our footprint covers 9 historic gold fields made up of multiple mines, at least 1,000 lithium, cesium, tantalum or LCT pegmatites, which are the host mineralisation for the lithium. We have so far identified 8 porphyry outcrops at surface. Porphyries are a geological structure, normally host very, very high tonnage or bulk tonnage mineralisation, and often you'll find precious metals as well as base or sort of industrial metals like molybdenum, of which Dart has a very large deposit, and I'll talk to that in a moment as well. The regional geological setting, for those that are technically minded, is that Dart sits at around the central part of a geological structure, a very significant geological structure on the east coast of Australia called the Buckland Fold Belt. Within the Buckland Fold Belt, there are hosted what they call the Macquarie Arc rocks, which range in age from about 350 million years to 450 million years. The Buckland Fold Belt is host to a number of different porphyry base metal projects. It also includes Australia's largest producing gold mine, which is owned by Newcrest, the Cadia mine, and they produce about 1.2 million ounces a year from there at a recovered grade of less than 1 gram a tonne, and yet it is still an incredibly profitable mine. This is Dart's exploration pipeline. You can see we've got a lot of prospectivity. If I get the laser to work, and I'm not sure that it does. We have the orogenic gold. We have what we call the strategic metals, which include lithium, tantalum, tungsten, tin, and others, including rare earth elements. And at the bottom there, you can see our porphyry, precious and base metal prospectivity. So at the top there, you can see the pipeline and its definition. So early reconnaissance work all the way through to target or resource definition. And we have 2 of those at the moment that are actually defined as resources. One is the Mount Unicorn Molybdenum Project, which is 6th largest molybdenum resource in the world at 209 million tonnes at 0.06 equivalent molybdenum. I'll speak to specific projects that we're working on right at the moment. This is what we call our Doorchap Lithium Project. It runs in a corridor around 20 kilometres by 12. We've narrowed it down. It is what they call pegmatite, hosted hard rock lithium. It's early stage, but thus far we have had some very encouraging results, which you can see down the bottom. 10 metres at 1.38 lithium oxide from rock chips, another 10 metres at 1.22. So we know there's lithium there. We have multiple targets, including around 1,000 pegmatites, which are of potentially commercial quality or size and grades. It is early stage. We're working on it very hard at the moment. Last year we conducted what's called a LiDAR survey across the area. The LiDAR survey effectively is airborne survey using laser to map the ground. It's accurate to within about 50 millimetres, and it allows us to see through vegetation. All the areas that we work in up in the northeast are heavily vegetated mountainous areas. So being able to see through the canopy into the actual ground, the outcrops, has been a tremendous benefit. It was an expensive program, but we have since uncovered another 240 odd pegmatites, which we need to ground truth and test, but also access tracks, and funnily enough, a whole host of old historic drill pads, which is quite significant for us. It means we don't have to do that work ourselves. In the interest of time, I'll move on to our Granite Flat Copper Gold Porphyry project. We have, in the last 6 months, proven beyond doubt that it is a porphyry. It's always been a very interesting structure for us, but we've had some tremendous. It's a complex deposit, two styles of mineralisation, one what they call intrusion related, and the other one a hydrothermal overprint. The hydrothermal overprint is a more traditional gold style deposit, and we've had some great results, including around 19 metres at 9.39 grams per tonne gold, including 3 metres at 41.4. The interesting thing with this, all the mineralisation we've discovered to date is either from surface or very shallow. So that means that it's, on the commercial side of it, it really does look like it might stack up. On the copper side, 19 metres at 0.61 copper. The work that's currently going on there at the moment is a very extensive soil sampling program for the geochemistry. We're also drilling a big deep hole, or 3 deep holes, using a diamond drill bit at about 450 metres each, and I'll talk to that on the next slide actually. So we did a survey, a geophysical survey, which allows us to magnetically charge the ground and understand what they call the chargeability anomalies. And this picture in the top right here shows you where those pink spots are. They're the hot spots of chargeability. What they really tell you is that there are what are called sulfides. The sulfides are highly chargeable. The sulfides are the mineralisation we're looking for. They're carrying the goodies. Now, we identified about 9 different targets. We've got 2 deep holes into one of these at the moment, which the second hole finished about a week ago. We've started a 3rd hole, and we'll probably have to wait, unfortunately, for about 6 weeks to get results back. But I do know the core looks very encouraging. We're seeing pyrite and chalcopyrite, which are exactly the kind of mineralisation you want to see that will carry the copper and the gold. So we did 16 kilometres of geophysical survey through the bush, uphill and down dale, and we're very, very pleased with what that's delivered for us. Buckland Gold is a more traditional style orogenic gold project. I guess its defining feature is the enormous amount of strike that we have so far identified, around 17.5 kilometres, or what's that, about 10 or 11 miles of strike at surface. But we also know from drilling programs that we've done there in the last 12 months that it is carrying gold mineralisation at depth, down to around 260 metres in depth below surface. So this is a really fascinating project. We've taken 7,500 geochemical surface samples and had them assayed. We use what's called an XRF, a portable XRF machine, which we have in-house, and so we process those and we map those against the drilling, and that helps to define precisely where we're moving to next on our drilling programs. We've got more work scheduled for this project this year. I've got a work schedule in the back of this presentation, and we'll get to that shortly. Porphyries. Porphyries, for those that don't understand them, are a geological term or structure. Very typically, very large tonnage, very low grade. And in the mining business, that's what you want. High grade is very attractive on the surface of it, but actually you want the tonnes, because if you're going to build the infrastructure to shift the earth, you want to make sure you've got a lot of tonnes there to process. So the Cadia mine that I mentioned earlier, Australia's biggest gold mine, 1.2 million ounces a year up there in the Lachlan Fold Belt. You know, they're very profitably mining gold. They're at less than 1 gram a tonne. So Data's identified 8 of these porphyries outcropping, and that's unusual. I mean, finding one porphyry is a great thing, but to have 8 of them is quite extraordinary. And we have one of these porphyries in resource, which is Mount Unicorn, that was discovered in 2009. By 2012, we had a 206 million tonne molybdenum resource on that, inferred and indicated under the JORC code. So our schedule works for this year and part of next year. At the moment, first half 22, calendar 22, we're completing our soil program. That actually could even be finished right now. Continuation of deep hole diamond drilling into what we call the Empress Porphyry, the granite flat copper gold porphyry. And we've also starting a soil program down at Buckland, was that orogenic gold project I just talked through. We've also got a great deal of work going on as we speak on our lithium pegmatites. Most of you would be familiar that the lithium price, the LCE, lithium carbonate, that's the kind of traded commodity, from a COVID low of about 5,000 US a tonne, is trading at around 65,000 US a tonne right now. So it's the hottest market for a commodity, I think, apart from nickel last week. And the interesting thing is that the forecast deficits of lithium production going forward versus supply are really significant, actually running all the way out to about 2029. So currently the world demands around 500,000 tonnes of LCE, lithium carbonate equivalent. By 2030, that's going to be more like 3 million tonnes. So that's a lot of lithium. There are geopolitical issues around lithium that you may or may not be aware of. Chile, which has been a substantial producer of lithium in the past, has had changes of government. There's a lot of things happening in that part of the world that may see restriction on output. So we'll see how it goes. But lithium is one of those rare commodities that really does have quite a good outlook for a number of years. Eventually, the exploration business will meet the demands of industry or whatever, but it's going to take a long time. And, you know, you can't start up a mine immediately. So, anyway, I'm getting a bit off track there. But so this year, first half through to the end of June, finishing off some drilling at Granite Flat on the copper gold porphyry, Buckland orogenic gold project soil sample program, and Estale, what we call the Estale lithium pegmatites. We've got 2 areas of lithium pegmatites. I didn't talk to the different styles of lithium mineralisation, but effectively we have pedalite and spodumene, which are the 2 highly desirable commercial mineralisations. We also have one called, or lithium hosted in what's called amblygonite, which is a phosphate, and also lepidolite, from which around 10% of the world's lithium comes. So, but most of ours is spodumene, and that is the demanded commodity for the conversion process right now. So we've got the right pegmatites, the right mineralisation, and we just need to get on and find some what they call proximal pegmatites where we can declare a resource. Declaring a resource in lithium involves a heck of a lot of drilling because it's all very close space. The pegmatites themselves tend to zone and carry concentrations of lithium in that part, concentrations over here, and they'll be sterile in the middle. But anyway, that's our lithium exploration program for the first half of this year. We're also doing some more geophysical work on a couple of the porphyry targets that we have that I mentioned before, and we have a Rushworth orogenic program which we're doing a bit of mapping on at the moment as well. So second half, more of the same, down at Granite Flat, Buckland Gold, more on the lithium prospectivity, We have and some other gold thing. Actually, the one mineral or the one metal I haven't mentioned in relation to Dart, which Dart has a great abundance of, is tin. And you may know that the tin price is very, very strong at the moment and potentially could go a lot stronger. It's a great technology metal in demand. Dart sits on a host of old historic tin mining operations from the 19th and 20th centuries, but we also have a thing called, we have under application for licence, a thing called the Wildwood Tin Mine, which was actually a contemporary, well, up until 1975, they were producing tin from there, and as a result of the low prices, they abandoned it. So we're going to get to the Wildwood Tin Mine in the first half of this year as well and do some more work on that. So in summary, Dart's an exceptionally cheap, i.e. low valuation explorer. We have a lot of, I think our message tends to get a bit lost on the market because we're not just a gold focus, we're not just a lithium stock. In fact, we have virtually no recognition for lithium by the market at all. And yet we discovered the first lithium on the east coast of Australia, and we have the most extensive lithium prospectivity probably in the top 3 or 4 projects in the whole country. And that's coming from a lithium chemical company that we've had discussions with. So I think we have had tremendous shareholder support, particularly from our larger shareholders over the years, and I think we're going to do extremely well this year. The market, the small cap junior explorers have been really smashed apart. This year potentially is the year of commodities and even beyond. So I think anyone in the exploration space has got a really big chance this year. That's about all I have. If anyone has any questions, just quickly, I'd be very happy to take some. And I don't mean to rush it all, but yeah, there's a lot to talk about and not much time. Jim. Yeah. Tim, how are you? Great to see you. I know, I remember Tim, yeah. Who could forget a mug like that? Tim, great to see you. Yeah, good point, Jim, on the cash. Explorers are always begging for cash. We have spent probably $5 million in the last 12 months on exploration. We do that very efficiently, I might say. We have a mobile camp that takes our drillers or soil guys or whoever, and we put them actually on site. So rather than having to drive an hour and a half or 2 hours through the snow in winter to get to the nearest accommodation, we'll work right on site. And that's been a huge benefit for us. But we'll need to raise some money, certainly before the end of June. But we've also got lots of conversations going on which might see our burn rate actually come off substantially, where hopefully we can get some funding from other joint venture partners and the like that could see, say for example our lithium program, we may well be able to get that entirely funded. And that would be sort of probably $4 or $5 million a year going into just pure lithium exploration programs. And obviously that takes a lot of pressure off our shareholders. Of course, we're being diluted at the project level. However, if we end up owning 10 or 20% of a producing mine, well, that's a pretty good place to be. So thanks, Jim.